Hello, welcome back to Unstockable Trading. In this video, I'll be showing you how I break down a graph and what kind of indicators and tools I use. And then we'll be moving on to a quick presentation I have to recap of what you should know. So this is the spider SPY. So the first thing I look at the graph, I'll click on the indicators right here and type in moving average. Depends on your personal preference. I do the 200 days moving average to know what the price is, average price is for 20 days. So the first thing we see here, the whole thing right now is below the 200 days moving average. So by the rule of thumb, everything that's below a 200 days moving average, it means that we are in a bear market, in which we are. So this is the 200 simple moving average. The next thing we will do is to do our Fibonacci retracement. Fibonacci retracement gives me the idea of what is trading within the area and what will likely to happen if we break the previous top or the previous low. So with Fibonacci retracement, you can do it. Most of the time, you do it in a daily chart. That's more accurate. So the Fibonacci retracement, you look at the top and look at the bottom, and just draw it. So this tells me that as for now, we are trading in the 0.236 area, the 269-ish zone. So if we break to the top, we'll be in the 269 and 273, and that's pretty accurate. If you look at what happened here, we're in here, we rejected, we come back in here, and then we're just in here, and then once we break out, we're in here for a while, and then we break out to the upside. Fibonacci retracement just gives me a overall idea of what the area the stock is trading within. Okay, so as a day trader for you, we should take a look at the 1 minute chart for today. Today is December 7th. Let's start with 9:30 a.m. Actually, just do 9:30 a.m. So let's look at 9:30 a.m. to 10:30 a.m. 9:30 a.m. starts here, and then 10:30 ends here. Okay, so with this, we can draw a quick trend line that we can predict what the price action is. So from here, we can see the downtrend. Look at the open and what the next low is, and then we look at the high, and then go down, matching with the previous low. So this is within the trading area. So what's the key here? You look at the open and then with the high, and you connect all the way down to the low and the previous low. So I said gaps tend to be filled, and then gap filled, gap filled, gap filled. And then once we below the 200 days moving average on a 1 minute chart, gap filled, gap filled, gap filled, and then gap filled, keep going down, gap filled, and then gap filled. So gaps are very important. How can you tell it's a gap? When you have a massive movement to the downside, and then some sort of a retracement back to the 50% of the time. It's quite true, generally speaking, but sometimes gaps are not to be filled in a day, maybe 2 days or give a week. But as for today, SPYs, we have a lot of gaps and they are being filled. So let's take a look at the next one. The next one I'll be looking at is our MACD. So what is MACD? So if you have investing.com doesn't offer MACD. So what I would do, MACD is very important as a day trader. Let's see, let me show you 1 day and 1 minute chart. So as for MACD, when this let's call it blue line, when this blue line crosses the yellow line, it means that the stock is overperforming, which means that we'll see a more buying volume kicks in. And then you can take a look at, let me show you closer. You can take a look at the color of it. As the bar goes up and the color is more bright, it means that the stock is going to go up. And then as it fades away, the stock going to go down. And then you see the blue line crosses the yellow line, goes below it. Once it goes below it, then we have a selling volume coming in. So MACD as a 1 minute chart, it can predict, and for options, it can show you a very nice signal to see where the thing is going. And I also have the PMC. It's a indicator by like a name by a dude called Persons. You can do quick study, jump Persons indicator, PMC, PPS, all this stuff. So this thing tells you, tells me the price action of what it's going to be in the next 5 to 10 minutes. So, for example, let's look at this. We have a up arrow right here. This tells you automatically. So it tells you that maybe within the 5 to 10 minutes, we're going to have an upside. So what happened here? We have the next 10 or 15 minutes to upside. And then we have a reverse downside arrow signal. That tells me we're going to have a 5 to 10 minutes downside. And we did. This thing is very, very accurate. I would say it's right most of the time. But sometimes the arrow pops up, right? And then the next signal changes what the arrow is, and the arrow disappears. So you can just take a look at this arrow. It shows you like, okay, confirmation downside, and then right here confirmation to the upside, but we got rejected right away. So a confirmation downside occurred. That could happen. Not always, but it could happen. So the next one we'll take a look at is how do you look at the moving averages. Depends on your personal preference again. 10 days, 50 days, and 200 days moving average. Moving average is the price. It shows you how smooth the price is for the particular interval you're looking at, and the average price of every single day. So you can have an idea of some sort to know how good is this stock. And every day I look at the volume weighted average price called VWAP. So that's how I map my support and resistance on it, because a lot of computers and traders look at VWAP, daily VWAP, to see, okay, what's the price is going to be and where's the next support. So on VWAP, you can also have on the TD Ameritrade, but you don't have on Robinhood. So I suggest you to download the Weibo app, which you have, and they have the VWAP that shows you. Let me show you. Well, you can see on the screen, but that shows you like, it's like a moving average, but for daily volume price average, and it's more accurate to tell what the price action is. So I have 3 indicators. 3 indicator tells me MACD, the Persons, and VWAP. So I strongly suggest you to use the VWAP because it's very helpful. A lot of traders and a lot of daily traders and computers look at VWAP to determine which level to go at. So we covered the MACD, the PMC, and PPS. Now we're talking about volumes. Sometimes when SPX jumps really high, and then if you look at it every day, you know what the average volume is. So it's really not important for blue chip stocks, but for penny stocks and stuff, volumes are very important. You don't want to be caught in a pump and dumps. So I don't think you need to worry about volumes too much, because the blue chip stocks we trade have nice volumes. Let's take the next one. Okay, how do you identify support and resistance and draw them out? This is a key thing to look at, and I'll be showing the 1 minute chart. Actually, 1 hour chart will be better. And today is a 7. So as in this graph, ignore the let me just delete this. So as in this graph 1 hour chart, let's draw a support and resistance on it. Let's look, November 7. Let's make it 5 minutes so we can do more. So as in this area right here, okay, this area. Like I said, gap. So we see this kind of gap, it's gonna be filled. It's a matter of time. Okay, let's draw the support and resistance on this one. I try to draw my support and resistance every single 5 to 10 minutes, so I know what the zone is and how I'm gonna trade based on that. So let's see this right here. We have immediate resistance right here at the top, because this is where we fall. So we have a resistance right here, and then we'll take a look at where the prices occur the most. So 1 here, 2 here, 3 here, 4 here, 5, 6. And then we have another resistance right here. How can you tell that's a resistance? Because every time we touch it near here, we get rejected. Every time we touch it here, rejected. Every time we touch it here, rejected until we broke out. And then again, we fall below it, we go down. And then we try, rejected, we try, rejected. And then go lower and lower. So let's see, another resistance I see is right here. How can I tell? Once again, where the prices occur the most. What I mean by that? Look at this. Prices try to consolidate in this area, in this area, in this area, and a fall, and then in this area, and then break up. So that's another, you can call it support or resistance, depending on if you're trading up or trading down. So if the price is here, that's a support. If the price is here, that's a resistance. And that's how I identify my support and resistance. We can also have another one right here, another resistance. So by drawing support and resistance, you know what the price action is going to be, and where the price is heading, either up or down, and then tells you the range to trade. Let's take a look at before and draw another example of it. Okay, a gap to be filled, and happened to be filled. So as a day trading, gaps are very important, especially if you play options, because this type of movements, if you're holding, I don't know, like 10 calls, can make you a lot of money. And then as you see this gap, we know it's gonna get filled to the downside. So if you can get a put, this right here can also make tons of money. Okay, let's just draw a quick support and resistance here. Clearly this is the support right here. And then the resistance, of course, right here at the top. Well, not at the top, but like, you know, like in this consolidating range, and then just fill break up. And then we have another support right here. But again, we break this support, and now the next time we're looking at is right here, and then right here. Right here and right here. So that's how I draw my daily support and resistance in the 5-minute chart. So if you have any questions, let me know. You just have to do this when you're free. Do it every day, like when you're free, and then try to see if the price action is inside your area, so you know how accurate you are. And then this kind of movement with options can make a lot of money on this type of markets. The next one we'll look at. Also for day trading, I look at 1 minute and then 5 minutes. I don't look at 15 minutes. Some people do. So let's just make it 5 minutes and 1 minute and 5 minutes. And okay, we did that out in day support. Okay, the risk reward ratio. That's something to look at if you are going to hold an option over time. SPY is not a good example. Let's take a look at Tesla. Just a random example. So for Tesla, this is a daily chart. You know the risk is, let's say if you get an option right here, you want to buy a call. How far can it go? Not too far, because based on the history, Tesla, the highest is not even $400, 385, 388. So this is the reward you're looking at. From 357 to 380, you're looking at about 25 bucks. What's the risk? You're risking all this right here. So the risk is huge. Would you get an option for a call? Probably not. Or would you get an option for a put? Most likely. So let me just do a quick support and resistance on daily level. We know the resistance right here because the wicks rejecting, and the support is right here because this is where the price is trading the most here. Once we break this, we break out. Once we break down, we break. Once we break this down, we break down. Same thing here. We break up, we break all the way up. We break down here, we break down, and then price is trading the most. And the next one, look at the gaps. What gaps do you see here? I see 1 here, 2 here, 3 here. So then the next support, 330. Of course, this is a daily time frame, so it's pretty further apart. Hope you get the idea of support and resistance. Let's take a look at how do you read the price action on TD Ameritrade. So TD offers me, let me show you, Amazon. TD offers me price action right here. You don't see anything with that because the market is closed. This tells me what time people are buying, at what price and what size, and it also offers me level 2. You can see what the people asking the price and buying the price at. That's something to look at when you do daily trading options, because that's important to see who's buying, how many shares are buying, and then what the price is buying. So I strongly recommend you to open a TD account. It's free. There's no minimum deposit. Okay, this one we have very simple signals. So a bullish engulfing candlestick. Okay, I'm not gonna read that. A bullish engulfing candlestick. Let's take a look at 1 hour chart so we can see a confirmation of it. So what is a bullish engulfing candlestick? It's when we have red for a little bit. So small red, small red, small red, and then we have a huge green that eats away all the red candles, engulf them. So what tend to happen after a bullish engulfing green candle? Most likely we're going to see more of the small greens and then have a pop. Tesla is not a great example because of today, but we can look at it anyways. So right here we see a okay, this is 1 hour, let's look at 15 minutes. Right here, perfect example right here. This is a bullish engulfing candles. So we have red for 30 minutes, and then the next candle, boom, eats away all this red. And what's gonna happen next? Small green and green, and then more greens. And right here, this is a bearish engulfing candles, eats away all the greens, and the next 15 minutes, more red. So this is the bullish engulfing and the bearish engulfing. Basically, the next candle decides that eats away the previous candle, so that decides what the trend is going to be like in the next 15 minutes or 30 minutes. But that's not always accurate, so I really don't look at the signals on the candles. I always just follow my PPS, and PMC tells me what's going to happen next, and the MACD is very, very accurate. We have a hammer reversal candles. It can be in both directions, so it's where the price action is moving away from the support and resistance by covering the previous candle, and then now you can see forming either high or high and low, higher highs or lower lows. Again, Tesla is not a great example because the price action is moving everywhere. Yeah, I can't really see anything more here. We can see it again right here, reversing hammer all the way up. But again, this thing for day trading is really not accurate. I don't really do this kind of stuff. I always use the PMC and PPS. You should get it, it's free. And then we have the Doji candlestick, which is a bearish candlestick. This thing is very easy to understand because we just look at the wicks. So right here, this is the wicks. So what does it mean? So it means that this shoots up all the way down and then recover really fast. And then this is a sign of either bearish or bullish. If we have a wicks to the upside, like this, that means it went all the way up and cover all the way back down. So most likely it's going to be a downtrend signal. And this one went all the way down, but it was recovered so fast. So most likely we have an upside signal. I mean, honestly, don't really worry about this thing because, again, PMC, PPS has it covered. Let's see what else I need to cover. This is done. Okay, let me show you one more example. Let's take a look at what else we have. Let's look at Alibaba, and we are going to look at the 5-minute chart. And let's look at the last 2-hour trading session. what can us identify the support and resistance right here? We know the resistance is somewhere here. Not here because I mean it could be here, but there's nothing can go up all the way here. So just ignore this. So the resistance is right here. Why is that? The price action is trading in the range is in this level most of the time. So look at here, here, here. So that's the resistance. Once we have a breakout, we go up. And once we have a breakdown, we go break down. And the next, I'll call it support this time. The next support I'll look at is right here. And why is that? Again, a break up, a break up, a breakdown, consolidate, breakdown, up and down, and then we're trading in this range the most of the time. You just draw the line and see where the prices touches the most. I wish I can show you a live example on the futures, but the futures close on Fridays. So, and I post those my trend lines on the futures sometimes during the night, and then to test myself to see if the future is trading within the area I posted, and lay out most of the time within the range. So we have another resistance right here, and the next one we'll be looking at is somewhere right here, where the price is occurring the most. Hopefully this makes sense to you. It's 22 minutes. Let me know if you have any questions. See you next live session.